Hey, good morning, everyone. It's hump day. It's Wednesday, September 17th, and the market is going to open in about 30 minutes. So it's a pretty good time to probably analyze some stocks, figure out what's going to be the play for today, if there is one. We've got a lot of stuff going on. I know it's a little bit of economic data. It's not directly related to earnings or anything like that, but we've got some economic data to share. We've got a big decision from the Fed that's going to be announced today as well. And the agenda for our live stream is pretty simple. We're going to do deep analysis into companies, and I'll handle the fundamentals, looking at companies through a fundamental evaluation and then evaluation of their free cash flows as well as their earnings per share, trying to get to an intrinsic value, a value of a company, if we measure it by the free cash flows that company is expected to produce, as well as the earnings. So that tells us, is it discounted or is it being priced at a premium? That's not enough. My colleague, Daryl, is going to then take us through charts, and he'll let us know what's the market been doing with that stock. Is the market trading that stock higher? Is it dislike it and trading it lower? And it's fascinating to see him operate. I really get a lot out of it. How are you doing this morning, Daryl?
I'm doing wonderful, Victor. It's good to be here, and good morning and good afternoon, everyone.
Yeah, it's great to be on with you. And early on, I think, the news of the day is probably going to be this economic report. Why don't I let you share your screen? Can you take us through the news on the economic side for today?
So let's talk about yesterday first. So retail sales came in, and they were expecting 0.3% increase in month over month retail sales. It was actually up 0.6,
Mm-hmm.
and it was revised down from 0.3 to zero point 0.2 on the day of the report.
It's
So
pretty good.
it actually beat it by 3 times. So the Atlanta Fed, I wanted to make sure that I showed this. This is somewhat of a real-time GDP
Uh-huh.
estimator, and it's a little volatile because it takes data as it arrives and puts it into the calculation that they use for GDP.
Mm-hmm.
But you can see that these retail sales, when they were added, the GDP estimate actually went up.
Wow.
So we've been in the past week or two, I've started seeing the recession word come back to the media, but based on what we saw yesterday with the retail sales, that's
Mm-hmm.
actually going to improve GDP.
So
And
so we if we buy into the data of that green chart, we're in a pretty good economy. I mean, a 3% is no, record-breaking GDP growth, but that's a pretty good growth.
yes,
Excellent.
and we look at the top 10 and bottom 10 averages in the blue chip survey, and I'm not for sure exactly what that is unless they're surveying CFOs and CEOs
Uh-huh.
across the blue chip um, spectrum. But the high was like 2.2%, and the low is just barely,
Mhm.
lows were barely above zero. And the GDP now is sitting, at least almost a full percentage above that at the moment. So
Okay.
that seems to be a good indication. One other interesting chart that I ran across this morning is this one. This is from Lance Roberts. He runs an investment firm for clients. This was put out by Goldman Sachs, but basically it's showing where the S&P 500 is versus where professional investors are allocated. And I'll let you talk about what you talked about before we went live, because that was kind of a nice
Be
approach
happy
to
to.
this. Yep, go ahead.
So, retail investors, and those are viewers of this live stream, this shows that the retail investing community, the informed investor that is putting time and energy into managing their own assets, is winning. And we're not winning, an ego contest. We're winning a return on investment goal that we have for ourselves. And when you look at what the retail investor did during this pullback, and we talked about it on this channel when it was happening in March and April, is it was a great opportunity to look at stocks that we really liked. If you liked the company in February, that you really liked it, and all of a sudden the market says, hey, here's a 20% discount on that same company, same fundamentals. Boy, that's good news. That's opportunity knocking on our door. And we answered. Retail investors continued to invest. We actually leaned into that severe pullback and we're winning. We are the blue chart. We are the ones that are now have a 4 touchdown lead, to use a football analogy, on institutional investors. Now, the institutional investors, it's my belief philosophically that the retail investors in the best situation that I've been in or I've observed in my lifetime. When I started investing 35 years ago, we just didn't have the access to information. We didn't have zero cost trades. I mean, I could go down a long list of things we didn't have that we have today. Especially, we have a lot of collaboration with other investors. This community, we have a Discord. It's a Discord of like-minded investors. But I also go on Reddit, I go on X, I go on different platforms and see what sentiment is around a stock potentially, which gives me cues. So the retail investor, this is a chart that says, let's stick to it. It's working. Speaking for myself, I'm having the best return on investment year of my career. It's really become substantial and it's really fun. So this chart really, I think, is making my morning. And those are my comments, Daryl.
Yeah, and we look at the seasonality charts for September, and we keep hearing, well, the data is the data. It is not one of the best months of the year over the last 13 years. And if you go back even further, I don't have data back that far, but for quite a period of time, September has not been very good. I have done a little bit of trimming, but it's been pretty minor because I haven't really seen any evidence of a pullback just yet. This market just keeps grinding a bit higher. But this gives me some confidence that these professional investors that are so many basis points behind the S&P 500 at the
Mm-hmm.
moment because
Yeah.
they didn't get back in. They thought this was a false recovery, and I've heard on the media this is the most hated recovery of all time.
Mm-hmm.
And it's because they just didn't get back in. But they're going to have to, by the end of this quarter, close this gap, or they're going to show really poor performance on their portfolios.
And I
So,
have more to add when you're done.
okay, so given that we have September as a typically bad season to be in the stock market, I'm beginning to change my mind that this September is going to be that case.
Mm-hmm.
And this is just one piece of info. I don't have another chart that I saw on Saturday by this same guy, Lance Roberts. He puts together a chart of the S and or not the S&P, the sectors, individual sectors. He does it by bonds, he does it by the dollar index, and he does it by commodities. But he looks at a longer term moving average compared to a shorter term moving average. and about probably 12 of those 15 indicators that he has, one for each of the sectors, and then commodities, dollar, bonds. Only about 3 of them are in a bearish configuration right now. Going,
Interesting.
yeah. So that to me is fascinating. That's weekly data that moves somewhat slower than daily data. And it's still showing that probably 90% of them are in a bullish configuration right now.
And let me add, so what is a professional, right? It's somebody who's managing money for other people. And one thing that's likely missing from this chart, just from an investor perspective, a number of years back, this is 15 years ago, I thought, hey, I'm going to hire a professional money manager. They're probably really good at what they do, right? Hey, I don't cut, like there's a lot of things in life that I really appreciate the professionals around me. I just went to the optometrist. I have a great optometrist. Okay, perfect. And my experience was terrible because the wealth advisor professional manager was like always looking for the safe play and kind of like, hey, if you study the economics, or not the economics, but the methodology, this is the smart move. But I'd underperform what I was doing before, and I would ask questions, and these were good questions like, okay, so how are we going to improve? That's a logical question because we're not performing up to the market's level. And he didn't like being questioned. It was almost like, hey, I know more than you do. And I'm like, well, you might, but you're underperforming the market and you're charging me money to underperform the market. The point I want to make is, as an investor, if you have money with a professional following the red, graph, in addition to underperforming the market, you're paying somebody for the lack of performance for the under. So it's a double negative. It's like, great, I didn't keep up with the market. Second, I have to pay somebody for that poor performance. No, thank you. I'll do it myself. I'll do far better, and I don't have to pay somebody. So that was one of the moments that I realized, and at that time when I had that professional advisor, I was extremely busy, and that was one of the reasons I wanted that was, hey, I have a lot of things going on, good things, and I wanted somebody to help me, but it was a bad outcome, and I decided, no, I got to bring it back in house, and until I find somebody that's going to outperform consistently, I'm glad to pay them money if they're going to perform, but if they're not going to perform, forget about it. All right, good stuff. So, have we talked about what the expectation is on the rate cut today and when it's going to be announced and so forth?
It'll be announced at 1 p.m. Eastern. They'll announce whether they're going to do a cut. That usually is just a quick blurb on the social media.
Mm-hmm.
And then 30 minutes later is when Chief Powell will start his press conference.
Uh-huh.
So we can look real quick just to see what the market's expecting. So it's a 94% probability that they'll do a 25 basis point cut. And there's a 6% chance that they will do a 50 basis point cut. So if he does a 25, that's what the market is expecting. There could be a sell the news type of market reaction, which would not be surprising. If he does 50, That's more than what the market is expecting. That could drive the markets lower if in his press conference he says anything about a weakening economy or going into some kind of recession. That'll put fear into the market.
I agree.
If he stays somewhat dovish, that if you go back to the GDP now, if he shows that, we're not moving into a recession and he does 50, that could actually be a big boost to the market. So I don't know exactly what to expect, but those are kind of the scenarios that I'm playing out in my head.
Yeah, and little J has a comment, I think, with regards to something you mentioned earlier, which is September historically could be a month where we have stocks going lower, but now you're beginning to think, well, maybe we're not going to have it this year. I think last year we had a positive year. I think little J is commenting on that hey, last year we actually had stocks go a little higher in the month of September.
Yep. So let me go to the seasonality. I can at least look back 10 years.
While you do that, blocks for fun. I'm looking at LYFT. Thanks for that tip. And it's so fun to invest in stocks. There's always something interesting that's going to happen, and sometimes it's like, what's his name? Forrest Gump said, life is a box of chocolates. You never know what you're going to get. The stock market sometimes is a box of chocolates, and today I'm got a box of chocolates where LYFT is rising on a partnership with Waymo. Back to you, sir.
Yeah, we could probably pull some data and look at September. This is probably the quickest way to look at it. So I'm just going to look at 1 year at a time. We can see that we did have one positive year when it's typically negative. I'll just step back in 1 year increments. So the year before it was -2.5, -3, -14, -11, -0.7, -1.1. So you can see what I'm doing here. I won't read them off to you. But in 2018, we had a positive year.
Mm-hmm.
And this one was for 2025. So that was a positive year. So 2018, 2015 looks like you can see the year up here, so you can stay with me. Mm-hmm. This is just 1 year. So we were down 5. There's 1.7. We did have a positive year in 2013. I'm not going to go back much more than this because we got into a big bear market. So in the secular bull market that we are in since 2013, it looks like we've had 3 or 4 positive years, and the rest of them out of the 12 or 13 have been down. So the seasonality holds up, but it could be that we break it the last 2 years.
Interesting. Yeah. We'll see.
Or this year and last year, rather.
Yeah. And, I came into the month somewhat kind of bracing for, hey, if we have a good sell off, I'm ready to go. I've got capital to deploy. And it's a good feeling because you're kind of I'm playing with I've got really nice gains this year. So I'm like, okay, the party's not going to last forever. So if it sells off, I'm ready to go. But if it's not going to sell off, okay, let's move to October. Let's see what happens there. And again, if the market is going to correct at some point, it can't go up forever. But I don't know that it's going to go up today or down today. I don't know if it's going to go up or down this week. But I think over the next 3 to 4 months, if we don't have a nice pullback of more than 5% overall, maybe even 10%, I'd be surprised.
Yeah. So, I mean, we've just been on a steady grind upward since April the 9th. The announcements were on the 2nd. We reached the Looks like we reached a low on the 7th. And with the exception of a couple of minor corrections, it has just been a steady grind higher.
It makes me think of, like Google Alphabet became a $1 trillion market cap company. When Google Alphabet moves higher, and it's moved up higher like 30% in the last 30 days, that shows up. That's a lot of market cap. And I know it's smaller, but it's moving, is United Healthcare. United Healthcare is now 400 billion market cap. Used to be a $600 billion market cap. And again, when that stock's up 40% in the last 40, 50 days. So those stocks are, in my opinion, part of this continuing rise overall in the index. Is you have some pretty substantial players that were being left behind previously that are now catching up quickly.
We're not in an overbought condition on the S&P 500. We're close. And I'm also beginning to like this last few days here on the S&P where we've been in a negative convergence. If we can break above, we may have already done it. There's 59. We may have to go up about 3 more points here. And if we break above this lower low, then we may be reversing this divergence. It may be back to, a positive. So I don't know what to think. It's pretty exciting, actually.
Perfect. So, days like this are I'm gonna say enjoyable, but the really interesting parts of the market are when we do have these strong sell-offs. That's where I feel like the best comes out of us, because those that really jump into, a market that's selling off and everything's bad. It's almost like in my lifetime, right? The baddest moments of the stock market, like we had this year, as an example, we had the S&P go down 18%, 19%. COVID, the big crash, COVID. Before that, it was the subprime market meltdown. And I can go back each one. On every occasion, emotionally, it was like I had to ignore emotions and put more money into the market. Stick to your stocks, put more money in. And that is the best thing I've done. One of the best things I've done in my investing career is stick to the logic. Don't listen to emotions. All right. So what are you showing here?
I've just nothing really. We are at the top of a trend channel, a 20-year trend channel. That's been one of my concerns. But if we look at the SPX, we're at the top of a trend channel right here.
Mm-hmm.
So this is a 20-year trend channel. We look at the NASDAQ. We're not at the top of a trend channel. So that's pretty fascinating to me. And if we look at the Dow, we're above we're in the upper half of this trend channel, but not at the top.
Got it. Okay.
Anyway.
All right. Well, let's do this. Let's talk about some stocks that are showing some action. LYFT. And LYFT is an interesting company. They're second fiddle to Uber. They're an $8.2 billion market cap, soon to be well over 9, because they're going up 16.44. And I'm not seeing it on the news feed, but I think Blocks for Fun on the stream here, he's saying that they're going to be partnering with Waymo, which makes sense. Now, Waymo is Google Alphabet. That's their robo taxi. It's their technology and it's physical AI, right? Because it's a robot basically. It's a robot in the form of a car, and it's working. I mean, they're in probably 10 cities at this point, so they're really scaling up. And I think it's smart for Waymo to partner with Lyft, Uber. Hey, just get their partnership and helping grow the number of people that are using their robotaxi technology. And Lyft is a discounted stock. I've commented on Lyft before. It's not a matter of fundamentals on Lyft. It's the investor knows, okay, Lyft, you're never going to win the championship ever. You're going to be second fiddle to Uber forever, unless Uber, and it's just a fact. Uber is so much bigger. But hey, there's a lot of value here. They've got a customer base that they've been building for 15, 20 years. It's profitable, it's growing, free cash flows, all the things are there. And I always sense that, Lyft is one of those things where something's going to happen to the positive. I wouldn't be surprised if Lyft got acquired because they're so cheap, $8 billion. Uber, on the other hand, is gigantic compared to these guys. If you look at the market cap for Uber, they are $204 billion of market cap. And 15, 20 years ago, these guys were kind of neck and neck. Who's gonna win the race? Well, I think we know who's gonna win the war. But I think Lyft can win a few battles. And Lyft is super discounted. I also think very highly of Uber. I'm a big Uber investor, which is one of the reasons why I don't jump into Lyft is, I'm in Uber. I'm good. I've been doing well with it. But I cannot argue with an investor that wanted to be in Lyft, even at this new price, which is $23.38. This stock is still discounted because the market has just pretty much left Lyft for dead. It's said, hey, it's a business not worth having. I increased my discount rate because it is a risky stock. It's second fiddle to the number one player. But even with that higher discount rate, it's a discounted stock. Now, when the market's going to like it or dislike it is anybody's guess. It looks like the market loves it today because of the Waymo partnership. And anybody that owns it, congratulations on Lyft. Any charts on Lyft, or can we move on to the next stock?
I do have a chart. It's
great.
Just recently had a breakout.
Oh yeah.
Yeah. So we're looking at a 1-year chart here, and this peak back in May was a little lower than the one in November. But if we put a line somewhere in between those two, or maybe even at the higher, because that would be a 52-week high. It did break out a couple of days ago. It is overbought. PPO looks really good and strong. It's in positive territory and increasing. And we're at an not an all-time, 52-week high on accumulation. So people are moving into it. I can show you my trades. So I first bought in February, and I've sold 40 shares out of the 140 that I bought. So I still have 100.
Nice.
And that's up 36%. My total return, including options, which added 3.6%, is sitting at 40.4%. And for my current return, which is what I currently have invested, is 49% over the last 8 months.
Excellent. Good job. It looks like every trade has been in the green, huh?
It hadn't always been like that, but they're definitely winning trades at this point. No losing trades.
Nice. Well, the pressure's on. You got to stay perfect with LYFT.
Yeah. I do have a few that are perfect, but not all of them for sure.
All right, nicely done. So, good news on LYFT, and yeah, I think there's value there, most definitely. See how it plays out. I think the robo taxi area is going to be interesting for a while. Now we've got a question for you. Little J, Daryl, when you get a chance, can you show us some of your favorite go-to technical indicators you use?
Well, we talk about them nearly every live call. So the three major averages that nearly all traders use: the 20-day simple moving average, the 50 simple day moving average, and the 200. If the 200 is increasing, you're in a primary uptrend. The 50 days increasing, you're in a medium term uptrend. If the 20 days increasing, you're in a short term uptrend. And if they're reversing, then it's the exact opposite. I like to look at RSI and use previous history. When a company goes into overbought territory, do they stay there, for long periods of time, maybe a month or two? Some of them do. Is it just a week or two? Sometimes I may have to go back further and look at a little bit more data. Here was one that was almost a month on LYFT. Here's one that was almost a month or 6 weeks. So using that as a precedent, I can form some idea of where I think this is going to start pulling back. Looks like the market's opened and LYFT is up pretty good this morning with a black candle. Means it opened higher than it's currently trading. The PPO and the MACD are almost identical indicators. The reason I typically use the PPO is this is expressed in percent, where on the MACD it's expressed in terms relative to that particular chart that you're looking at the time. So I can easily compare. If I go to a different company right now, I can see the 12-day moving average is at 7.5% higher than its, let's see. I'm going to have to think about that a little bit, but it's expressed in a percentage. So I can move to a different stock and it's going to also be expressed in a percentage. So I can easily compare one to another. On a lot of my charts, I do have MACD. I don't have any problem using it because they're basically the same exact indicator. This is an indicator that I'm just experimenting with. I do like it. It comes from the relative rotation graph, which is exclusive to stock charts environment. It was created by a gentleman named Julian Kempener out of Denmark. And he puts, if we look at a relative rotation graph, he puts these stocks based on relative strength, which is the vertical here, and momentum, which is horizontal. So if a stock has relative strength and relative momentum, it's in the leading sector or coordinate of this chart quadrant. If the relative strength is better than the S&P or whatever you're using as a baseline, in this case, I'm using SPX as the baseline, and the momentum is lower, then it's in this quadrant. If it's weaker in both of those, it's in the lagging quadrant. And if it has better momentum but less relative strength, then it's in this quadrant. So what you can do with this is just move this around and watch it over time and see how either stocks or sectors are moving relative to a benchmark over time.
Excellent.
So you go back here, I can just tell by this without having to go to the relative rotation graph that LYFT has better momentum and better relative strength in the S&P. So guess which quadrant it's going to be in? It's going to be in the leading quadrant, right?
Mm-hmm.
So it tells me that without having to actually go back to that chart and look at it. These two, the money flow is if the stock closes higher than it did the day before, then the volume is positive and gets added to money flow. If it's lower, then it gets taken away. So if you have more down days than you do up days, then the money flow becomes negative. If you have more money flow, it closes up more than it does down, then you're going to have positive money flow. Then accumulation distribution is basically the cumulative total of all of these green bars versus the negative bars. So you get a cumulative value. So I can look over here and say, over this past year, the accumulation is at an all-time high based on this money flow. So these are the ones I look at mostly for this show, just to stay consistent. Now, if I'm starting to look at a particular stock to trade, they're going to change a little bit. And that would be something we could talk about at a later time, but I'll stick with this for now so I don't bore everybody to death.
That was really good. Thanks, Daryl. So just taking a peek at the market, it looks like some big stocks are selling off. Nvidia, Broadcom are selling off. Meta's selling off. Tesla's selling off. Uber is down 3%.
Nvidia had some bad news this morning.
Yeah, I think Alibaba made a deal with a company in China. It's related. And so that combined with the Chinese government is saying that, hey, they're banning some NVIDIA chips, if not all NVIDIA chips. And I think that's the pressure on NVIDIA.
Now, luckily, Nvidia didn't include any China sales in their guidance, so this may be a bit of an overreaction, but we'll see.
Yeah, I think we'll see how it plays out. But it's just one day. NVIDIA is doing great overall. But it is kind of, some spots are really red. And there's a lot of green, though. Look at the participation for the rest of the market. Healthcare is nice and green. Utilities, real estate. Real estate's going to benefit from lower interest rates. And then we've got consumer staples. Look at that. Everybody's going in. We're not sure what the Fed's going to say. So let's just buy some consumer staples and play it safe. And we've got some telecom services. That's kind of a safe space. Apple's up a little bit. Software space is up for the most part. You got some stocks moving up. Uber's down. I've always disagreed. Uber, I think, belongs as an industrial because they move things. They move people and they deliver stuff, right? So move them over here because that's where you have railroads and you have airlines and stuff. I always thought we should move it over here, but that's my opinion. All right, so let's get into some stocks, some specifics.
Yeah, from a sector point of view, utilities is at the top of the leaderboard this morning, followed by real estate, followed by consumer staples. Those are three defensive sectors. Communication services, technology, and discretionary are at the bottom. That is your offensive groups. So the market is definitely playing it defensively at the moment.
And I think you mentioned the Fed is going to announce their decision on an expected rate cut around 1 p.m. Eastern, correct? So that's 3.5 hours from now.
Yeah, won't be an expected rate cut. It will be either they'll cut, stay in place, or they'll cut even deeper than the market's anticipating. So they announced that it won.
Mm-hmm.
Maybe I
Yeah.
read too much into your expected word in your question, but it will
Yeah.
be
Yeah.
announced at 1. We'll know what the rate cut is at 1 o'clock.
Perfect. Yeah. Agreed. Okay. So we've got that. The market is, I think, fairly flat, right? So we've got the market. Yeah. The S&P is flat. NASDAQ is down a bit. We know why. Some of the big players are down. The Dow, the safe stocks, some of the safe stocks that are in the Dow are up. So that looks good. Let's take a look at some individual stocks. We talked about LYFT already. It's up 8%. Now let's move over to, I think you wanted to talk about Qualcomm, which I'm always in the mood to talk about Qualcomm. It happens to be, in my opinion, a discounted semiconductor stock, which is a rare find these days. To say discounted semiconductor stock that's sold off for the 1 year, man, that's like a very rare find. And it has been somewhat performing not up to the standards of an Nvidia, Broadcom, or others in the semiconductor space that are just flourishing. But these guys are a big cap, 177 billion, big revenue, PE ratio of 16. Is that a misprint? No, it's real. 13.88 forward PE. Analysts think it's discounted. And when you look at the growth of the company, it's a big company, big revenue, and it's growing. So what is the deal, stock market? How come you're not, buying into Qualcomm? It's because they're not in the data center related to AI. So they're not in the VIP section of the stock market. But they have a solid business. Their Snapdragon chip is doing really, really well, and it has very efficient power consumption. So they're putting it on laptops. That's doing really well. The handheld business is doing well. So Qualcomm is a quality business that I just think continues to be discounted, continues to have my capital. I'm good with it. It also pays a dividend. I forgot to mention a dividend of 2.16. So Qualcomm looks good. What are analysts thinking here? We got 20 analysts covering Qualcomm. Optimistic analysts have a price target of 225. Bear analyst at 140, but the downside isn't too bad. It's just down a little bit, but it can really go up. I think this could be a nice performer, going 15, 20% rate of appreciation, and you get that dividend. So that's not a bad situation. It's expected they're going to continue to grow, not very fast, but they're going to grow, and their profitability is going to expand. Their PE is super low. So this is, if you're a long-term value-oriented investor, boy, this is the right semiconductor stock to take a look at and see if it's something you're interested in. So that is Qualcomm. Let me show my valuation. We'll take a peek at that. Then we'll cut over to you for the charts. So Qualcomm is discounted by 43%. When I measure the value of the business, if I look at their cash flows and look at their forecast of cash flows that I've put together using their fundamentals, just a really, really good business. And they've been around for a long time, have a strong reputation. All the things look good for Qualcomm. It's a nice, in my opinion, a safer semiconductor stock. If we have a big pullback in the data center, it's not going to hurt Qualcomm. If we continue to just have natural consumption of laptops, handheld phones, and whatever it be, Qualcomm's going to be a player. So that is Qualcomm. What are you seeing on your side on the charts related to Qualcomm?
So I only have a handful of shares of Qualcomm, but I just picked up 5 more, and I'll explain why here in just a moment. So all of these are also in the green at the moment. That's good news. And when I say I use different charts for trading, I just bought these today because I'm starting to see the PPO moving higher, the RSI moving higher, and we were in a TTM squeeze this morning, first thing. So I use different charts when I'm moving in to an actual buy for the day. So this is Qualcomm, and I posted in the Discord that they broke out of a 13-week swing high, and they also broke above a 65-day swing high on Friday. So those are two indicators that it could be moving higher. So it's been higher than it has in the last 13 weeks, or if you're looking at a daily chart in the last 65 days. So I drew this trend channel, put the dotted line somewhat in the middle, tried to get it as close to the middle as I can. You can see since the beginning of August that we had been trading at the bottom end of that channel, and we're starting to move into the higher, the upper portion of this trend channel. We do have some resistance at 174, but I think we can run from 165 up to 174, and if it breaks out above that, then I don't know where it'll stop after that. But the RSI is not overbought. PPO is strong. Accumulation is at a 52-week high. The money flow is the high was in February, but we're not very much shy of that peak money flow back in February, and it is improving still. So I think Qualcomm is set up really well right now. So let me see if there's anything. No, I just drew my annotations on here so we could talk about it this morning since I posted it in the Discord.
Yeah, and I think Qualcomm, I'm not imagining it's going to be like the top performer, but it's just a good quality value stock in technology. It's hard to find something that has the fundamentals that Qualcomm has, especially in semiconductor. So it's a stock that I bought into. All right, so let's move on to Prudential or Johnson and Johnson. I'll let you kind of take us from here. I'll let you keep the screen. You lead with the charts, and then I'll come back to the fundamentals.
Okay, so PRU, Prudential. I'm a dividend investor, an income investor. I'm in between early retirement and initiating Social Security here within the next year or two. So for these last 5 years, I had to work my portfolio pretty hard, harder than it should have to perform, with trying to minimize my risk as much as possible. So I don't expect necessarily big gains, but I do mix in stocks with some gain potential because I suspect that eventually I will transition once I start Social Security, that I will actually transition to somewhat of a more growth oriented portfolio. So let's look at the seasonality for Prudential. They usually take a hit in August and September. This past August, let's see, they did not take a hit. They actually rose quite a bit, but they are taking a hit in September. So we can see it's starting to form a wedge, and it may break down below this price. My average price is about $98 per share. I've owned this for a very long time, since 2021. So I've made 42 trades on this one. My total gain's been 14,000. My win rate 74. I've had 11 losing trades, and my gain loss ratio is 3.22 to 1. So I made $3.22 on my winning trades while losing $1 on my losing trades. So this has had a total return of 14%, about 9% annualized. So it's a nice, steady income producer. That's one thing that I like. So September is often a pretty poor week for Prudential, but let me show you. If you're an income investor, this might be interesting for you. Look at October and November. Over the last 13 years, it's had a 3.5% gain 85% of the time, and a 5.3 gain 77% of the time in November. So you're looking at a total of 8.8% potential for PRU over the next 2 months once we get through September. So what I'm saying here is that towards the end of September, I actually plan to be adding a few shares. And it's very close to some of my midpoints on my sales, on my buys rather. So if I can buy it cheaper and then expect the gain of 8.9% over the next couple months, then I'm going to sell some of my higher priced. It'll reduce my cost per share. And at the end, I'll still have the same amount of shares with a dividend yield of 5.29%. My yield's higher than that. And over 5 years, it has a growth of 4.47, which is beating inflation. So that's my plan for October. If you're a dividend or income investor, you might want to consider Prudential here in the next couple of weeks before October and November hit.
Yeah, excellent. So Prudential has that good dividend rate. Now, any concerns on like how the stock's been trading lower? So, any comments on that?
If it does rise 8.9%, it was at 125 as recently as November.
Mm-hmm.
And it's, if we look back even more years, this is one that I've traded because look at the volatility. It's just based on what the market wants at any given time. So I watch this and I buy and sell. That's why I've traded it 42 times over the last 5 or 6 years.
Okay.
So if it does go up 8.9%, we'll be above this downtrend line. And we could see a reversal as rates start to lower. That should help Prudential, if I'm understanding that correctly.
Okay. Well, let me show like my review of Prudential. So Prudential over the year to date, it's down 13.56. Over the 1 year, 11. Now, this stock, if you measure, you're getting a nice dividend, right? So just kind of using simple math. If you say, well, geez, 5% a year, 5 years, add 25, 30 points, that's a pretty good rate of return combined. And volatility is my friend. I get to buy it at times. I don't own Prudential, but if I was looking at it, it's given me opportunities. Sometimes we have to be patient and buy under the right conditions. I would recommend that we buy under the right conditions. Wait for the stock to be nicely discounted. Buy it and then watch it rise, and then you get this nice dividend and you get appreciation. Now we are getting a pullback. Is that pullback a nice opportunity? Well, I'll get to my evaluation in a minute. Let me go over a few things first. Market cap isn't the biggest market cap. We're going to see 36 billion. Revenue is really high. These guys do insurance. They do insurance, life insurance, and a variety of financial services and products. They do annuities, that kind of thing. I think the stock's been trading lower because in the trailing 12 months, we got some negative numbers. They have seen a contraction in their revenue. Okay. So is this systemic? Is this going to continue to come back and be a negative number? That could be a problem, right? If they could start growing a little better, then obviously the stock's going to flourish. And this is a little bit of an up and down business. We have had a flourishing stock market. Do you think interest rates and them going down will help or hurt Prudential?
Well, that's something I'll have to think about. I would think it would help them, but
Yeah.
I'll have to think about that a little bit.
Yeah. I couldn't
If
answer
you'll
that question.
notice, if you'll notice, those losses were in the 3 years that we've had higher interest rates. So
Mm-hmm.
I may have to talk to somebody that's a lot smarter than me about that to understand that a little bit better.
Mm-hmm. Yeah.
They are expected to grow over the next 3 years.
Right. Okay. And you know, the one thing I did see in their fundamentals is that even though the top line isn't going to grow fast, the bottom line, the net income is growing nicely. It's growing a lot this year, 86%. And then next year, it's going to grow at 7%, 7.6, 6.4. Those are nice growth rates on the bottom line profitability. And look at the P ratio is going to be super low, incredibly low. So when I value this stock, I mean, it is, this is a good value stock for investors that are like, hey, I want a nice dividend. You know, maybe you're at a point in your life where you're like, hey, don't want to take too many big chances. Don't need to make 35% a year rate of return appreciation, but I'd like a nice dividend. This is a pretty good looking stock. I'm using a 10% discount rate because this is a little bit risky with their declining sales. I don't want to treat them like, hey, everything's fine. And their balance sheet does have a little bit of debt, not too bad because they have some cash on hand. And overall, I think they're fairly priced. I think Prudential is fairly priced. If it had any more of a pullback, it'd be discounted. So for the investor that's looking for an income stock, you know, think about Prudential. Just buy it at the right times, buy it under the right conditions. That way you're sitting there with a nice 10, 20% appreciation on your investment and you're getting paid that income. So those are my comments on Prudential.
Yeah, I typically use book value. So they have an $85.98 book value, and adjusted, it's at 96.41. If you can get it anywhere around in between those two ranges, even below 96, I think you'll do okay with this stock.
And while I'm on this, my valuation here, so this sheet has, I think, like 240 different companies that I've valued. And for all the members out there, I put it on the Discord, I put it on the YouTube channel. I updated this sheet. I try to update the sheet at least once a month and sometimes twice a month. And I just updated it yesterday. So everything that we did up until yesterday is on the refresh sheet, which means that members can go on the sheet that is out there. You can look up J&J and you'd be seeing what I'm seeing here. You can look up all the valuations we've done to this point and refer to my research if you'd like. So next company we're going to talk about is Johnson & Johnson. I'll kind of do fundamentals and then I'll turn it over to you. So Johnson & Johnson is a very respected company. They are a healthcare company, $425 billion in market cap. This one here, year to date, wow, look at that, 23%. The 5 year doesn't look good. 20%, 19.46, not getting done, not in my book. And look at this volatility. You could pick up J&J at the right times. And man, if you're a swing trader, geez, this thing's a a dream come true. You can buy it low, sell it high, buy it low, sell it high, buy it low, sell it high. You could have done that 6, 7, 8 times. So Johnson & Johnson pays a 3% dividend. That's looking good. The company is not growing fast, but they continue to grow. That's consistent growth on a big number, $90 billion. The company has a solid balance sheet. Their rating on their bonds is the highest you can get. There's a few companies that are at the highest, like Johnson & Johnson, Microsoft, and a couple of others. These guys they're just cash flow. It's a cash flow machine, although they're not growing a ton. Gross margins are really nice and high. So the growth isn't overly exciting, but let's see how their profitability is growing. 14 analysts cover the stock, and some analysts think it could move higher to 215. The downside isn't too bad at $152 price target toward the bottom. And when we look at the profitability is going to be kind of in line with their revenue growth. So I think it isn't going to extract more revenue or profits from their business. It's going to be pretty stable. And Johnson & Johnson, again, we're talking about some pretty conservative investments. And, I don't own Johnson & Johnson. I don't own Prudential either. It's fairly priced in my book. I think it's a good company, very respected. For the right investor that's looking for that 3% dividend, I would encourage any investor to be patient and pick your spot. Make sure you're getting a good discount. On a day like this, you would think J&J is moving up, right? Is it moving higher? Because, yeah, the market's playing it safe before we hear from the Fed. And I think that the stock is fairly priced at this time. So that's my fundamental review of Johnson & Johnson. Let me turn it over to you, Daryl, for the charts.
Okay. So this one also broke out of a 65-day swing high and a 13-week swing high. It did that at the beginning of August. I didn't catch it quite at that time, but it broke out above these two tops. So I went out and extended that to 5 years, and I saw something even more exciting. So Johnson & Johnson since 2022 has traded in a range from 135 to 165. It just recently broke above that channel. So at the end of July, beginning of August, this is a really powerful pattern because we're looking at a 3-year base. We're not looking at 1 month. We're not looking at a few months or even 1 year. We're looking at 3 years of data here where it didn't trade out of that channel. Suddenly, they've made some adjustments to their business. They spun off Kenvue. They're making some other adjustments to their business. The market was somewhat patient or maybe impatient with them. And now I see sentiment shifting in J&J. So
I got a question when
this
you're
is
ready.
an incredibly powerful base breakout.
This is really interesting. I have a question. So as you see this breakout and the price going higher, any comments you could offer on psychology or kind of approach? Hey, this is a rising stock. In a way, that's really good news. It's like, hey, great, join the party, get into a stock that's going higher. Anyway, if you can comment on your mentality, if you're comfortable in buying into a stock that's rising, or if you're cautious, like, hey, wait a second, is this thing going to pull back?
I think we may have an opportunity. Did I show my trades on this one? So I've owned this since 2023. You can see all of my trades
Nicely done. All green?
Yep, they're all green. I've made $795 worth of dividends on it. Few options here and there for a total return of 18.4%. So for a dividend investor and income investor, it's done really well.
Absolutely.
So I haven't sold any of these. I own everything that I've purchased. I do see that there is an opportunity for a pullback. I see in fact, I'll just back out to the 1 year chart. 1 year chart. Okay, so we do have a declining PPO. It's still positive, but it's declining. So I anticipate some lower prices. Let me change this one since I'm actually looking to maybe add some more here. I'm going to change this 20-day simple moving average to a exponential moving average, 21 days, and I'm going to change that to green because I'm actually looking to add more to this one. So remember a couple of days ago, we talked about if it can stay above the 21-day EMA.
Mm-hmm.
That's a really good sign. It is doing that. It's coming down to test it. It tested it about 5 or 6 days ago. So if it can stay above this 21 day or maybe drop down below it for only a day or two and then rise back above it, then I still think it's a really positive stock. But based on the RSI, which is still positive, I mean, it's 58, it's still in bullish territory, and accumulation is at a 1 year high. So if it comes down and like tests the 21, I should have been buying a few days ago. Anytime it comes down and tests the 21, then I should be thinking about adding to this stock. It does have a dividend yield at 2.93%, and its 5-year growth rate is that's Prudential. Johnson & Johnson is 2.95 with a 5-year average growth rate of 5.32, and we have that 3-year base breakout.
Very good. Nicely done, sir. Perfect. So we covered Johnson & Johnson, Prudential, Qualcomm, and let me take a peek at the stock market, see if anybody is getting overly nervous about what the Fed is going to announce. We're still where we were at. All right, no problem. And let's look at that heat map. And we've got some other stocks that I wanted to go over. So we're about where we left off. Meta's selling off a little harder. Palantir's selling off a little bit. Broadcom and Nvidia are giving up a little bit of their gains, but they are having terrific years. Man, it's pretty green over here. The garden is looking nice. Nice green garden. Looks like we fertilized our soil, watered it, and those plants are looking nice and green. Very good. Very good. All right, let's keep rolling here. Look at this.
Let me look at Prudential real quick just to reply to Ben 10.
And then we got to cover NVO because little J has a bromance with NVO that we got to cover.
So I subscribe to Simply Safe Dividends to keep an eye. Unlike some other sites where it's algorithms that calculate safety scores, Simply Safe Dividends, they do all this through research, and they've captured about 90% of the dividend cuts before they actually happen. So if you're an income investor, this is a great site to have if you're managing your own portfolio, focusing on dividends. So Ben 10 said that the dividends are tempting and they're not risky. They have them rated at a safe 75 score. They also have a credit rating of A, which is very good. So anyway, that's the only thing on Prudential that I wanted to reinforce there.
Yeah, thanks. Thanks, Daryl. So let's cover NVO. I think little Jay wanted to take a look at NVO. Whoa, what's going on here? Somebody decided to move NVO higher, and this thing has been kind of, I don't know that NVO is, I'm ready to claim that NVO has hit its bottom, but maybe I'm getting closer to making that decision. Why aren't we finding NVO here? The net. So is Google not? Here we go. There we go. Come on, Google. So Google's showing a little bit of a rise. And what I wanted to show was, we've had a nice little rise here over the last week or so, up 9%. I can't say that, hey, we've hit bottom, but I'm going to keep following it because, maybe a 30% rise from that point. Maybe. Let's take a look at fundamentals. So big cap stock, $253 billion. So this is a biggie. And these guys flourished under they have probably the most effective, successful weight loss drug in the market. So that looks good. PE is super low. Jeez. And for a company that is growing revenues by 21%, what is the market doing pricing the PE where it's at? Now, there is concern, hey, they've got a little bit of tension with some of these compounders like Hims, and of course, Eli Lilly wants to compete against them. But I think the drugs that Novo Nordisk produces are more effective. So this company is growing really well, really good free cash flows. Forecast only three analysts covered. That's a surprise. This is a big cap, but they are in Europe. And the most favorable analyst is like way underpriced. The least positive analyst it's a $64 stock. Either way you go up. Big discount. Not a lot of analysts covering it, but they are positive on the stock. And when you look at this stock, they're going to keep growing. They're already gigantic, and their profits are going to grow with them. So this is a solid company. Dividend is 2%. So it's not a giant dividend, but it's a dividend. And when I look at my valuation of NVO, I am an owner of this stock. I have been buying into this stock thinking, sometimes the market just gets into the wrong mindset on a business and just dog piles on a stock. Oh man, let's just sell it off because we don't like it anymore. And I think that's what happened to the NVO. So I gladly bought shares, and I continue to buy shares. I'm glad because it's now beginning to rise. I think it's still 34% discounted as I speak because their value of their free cash flows, and I'm using a higher discount rate because it's a very good company, very well recognized. It's out of my home country. So I got to add a little bit of risk there. I don't know Novo Nordisk as well as I do these American pharma companies. I don't know the rules and laws that they have to follow in Europe. So I'm taking a little bit of a higher risk, not too much more. So it's 8.5%. When I use that discount rate based on cash flows, I think the stock's discounted by 24%. And based on their earnings per share, it's discounted even better. So this one here is a buy for me. I've been buying into Novo Nordisk. I'm not like betting the farm. I'm kind of betting the farm on United Healthcare in this space, betting the farm on some other stocks, as I've mentioned in the past as well. This one here, I think, is a safe one, and I'm gladly buying more shares of Novo Nordisk. It's good to see them rise today. You have any comments on Novo Nordisk?
Let's take a look at them. I want to draw a couple trend lines on here, and I'll let you take your pick which ones you want to use. So this longer term trend line, if I were interested in this company, I would use the longer term. And basically what it says to me is that it would have to break above that because it's in a downtrend. The 200 days declining, the 50-day is declining, the 20-day is increasing. So
When
it's
you
in
chart it, one thing to point out real quick is really does help me see how it's rallied in the past. And it was kind of a bear market rally, so to speak. It rallied for a little bit and then it sold off. It rallied a
Yep.
little bit and then it sold off. So
Yep.
when you chart it and you put those lines, I think it helps your, at least my eye, I guess, the context to that line helps me see those rises and then pullbacks.
Yep. So this longer term trend line, it would need to break out above, about 66 before I would even be interested, because it's in a primary downtrend. Not that I would never buy them, but I'm not going to buy them in this technical setup.
Mm-hmm.
Their RSI is improving at the moment. They've had a negative PPO for most of the last 2 months. It looks like it broke into positive territory for the first time today. This is a little concerning. People have definitely seemed to lost their interest in this.
Mm-hmm.
Accumulation is at a 52-week low. Keep that in mind. Look at this as well. Most of the buying over the last year, this is 1.5 years. Let me go out just 2 years even. Yeah, most of the buying, I'm looking at the price by volume
Mm-hmm.
bars here, has been at 81 and below.
Mm-hmm.
There are some buyers up here that would be called stranded longs. Anyone above the current price, any of those buyers up here in this gray,
Mm-hmm.
those are stranded longs. They are going to put downward pressure on any potential upside of this price. There's going to be buyer or sellers stepping in to get rid of their shares
Right.
because they've been stranded for a while.
Got it. Yeah, I could
So
see
just
that.
keep that in mind. If you're a long-term believer, no reason not to be cautiously buying here, but there's a lot of downside risk to this particular stock, in my opinion.
Yeah, and Saeed's got a good comment, which is, hey, they depend on that weight loss drug quite a bit, and there is, more competition, especially from Eli Lilly, as well as some less expensive options. I totally get that. They do have the most effective weight loss by diabetes drug. They've gotten to an oral version of it. It's also most effective. So I don't doubt that, hey, competition's out there, but at the same time, they're growing and they're very profitable. So I'm not looking to, kind of see Novo Nordisk come back and kind of prove all the naysayers wrong. I'm looking for a really good value. I'm looking for a stock it's almost like Michael Burry, part of his investing style philosophy is he's looking for opportunities. That opportunity may be in a retail stock, which he's invested in. He was in Estee Lauder, which I look at Estee Lauder and I don't think I'd be an investor at any point. But he's looking for like a setup. And as I look at Novo Nordisk, that's what's attracting me is remove that they're a pharmaceutical company, remove that they're this leader in the space. You look at those cash flows, you're like, wow, this is a lot of money. And when I value those cash flows, that's the numbers I get. And the profitability's ditto. Balance sheet's good. So that's my basis. Now, am I betting a big pile of capital? No, it's a small pile of capital. Am I ever going to bet a big pile of capital on NBO? No. I'd probably keep it a measured amount. Again, my big bet in healthcare is United Healthcare, as well as some smaller players. And those are my comments there. Good stuff. All right. So we covered NVO, and let's go over Alibaba if we could. They had some news. I think it came up a little earlier in the stream because we talked about Nvidia and how our friends over in China, Alibaba, made a deal to sell some AI chips to Unicom. Not familiar with Unicom, but I think they're a pretty big outfit. And Unicom is going to use the AI chips from Alibaba to, I guess, build out their AI infrastructure. And this stock has been working. I mean, 37% appreciation 1 year, 96% year to date. 1 year, 98.8. You get a tiny dividend. So nicely done, Alibaba. It is a stock that I made a good sized bet on, and it's working. And they are now a big cap. They should be a big cap. These guys are strategically located in Asia. Asia is a high growth area. That's a big economy. They're selling to the world. And a lot of things I like about Alibaba. I like their cloud infrastructure business is booming. They have their e-commerce business, and I can go on and on. Their growth is stalled, but they have made us aware that we're getting our cloud business built out further because we're growing at 26%, and I'm expecting their growth is going to accelerate in the future. This is in the Chinese yuan, so it's not a trillion, by the way. It's less than that. I think it's more like 150 billion in revenue, which is a good number, big number. Forecast. What are analysts thinking? 12 analysts cover Alibaba, and their comments, this is the price targets are within range of one another, 195 to 135, fairly priced. And the stock has been rising quite a bit. When we look at the growth, see how this growth is going to grow. That's that data center. And that data center business is really profitable. So exciting times for Alibaba. Exciting times for all the hyperscalers. It's like, geez, man, it's a really cool time in our economy and where we are with technology. Look at their profits. Boom. Really nice chunks of growth. Very good. So Alibaba is looking good strategically. It's looking good from where the performance has been. Now, has the stock gotten too expensive? Have these guys been going up too much? Well, let's see what my valuation has. And as I speak, I still think there's a 16% discount on Alibaba. I was buying into Alibaba on all these pullbacks because the market, as mentioned before, it will do some interesting things. It'll pick up a stock and then drop it. And I gladly bought more shares. And now I'm kind of just sitting back, enjoying the show. You keep doing your thing, Alibaba. 16% discount. It's a good discount, but right now I'm just kind of sitting on a pretty substantial position of Alibaba. Glad to see it rise. I have a higher discount rate, as mentioned on NBO. If you looked at Amazon, I have a lower discount rate. And I am loading up on hyperscalers. I've got Alibaba, got Amazon, I've got Google. Those are three massive hyperscalers. Hyperscalers are cloud operations, data center operations. So Alibaba is looking fantastic. What are your thoughts on Alibaba?
Chart looks really, really good as well. So I drew this auto resistance line here at the March high. So it broke out above that. This would be a 13-week breakout and a 65-day swing high breakout as well. So this looks really good. I switched from a 20-day simple moving average to a 21-day EMA because that's what I would use if I owned Alibaba and was worried about a pullback. As long as it stays above that 21-day moving average, I would continue riding it. So if we look at these lines, the slope of these lines, the 200-day, this red line down here, was slowly increasing, and all of a sudden the rate of change is increasing. Same with the 50-day. We were actually going negative. We turned positive around the 11th of August, and the rate of change is increasing there. The 21-day EMA is also increasing.
Very good.
So if you want to own this one, you're afraid of it being at too high of a price, but you want to add more, I would not be afraid. I would do it in a heartbeat. If this fell into my realm of investments, I would do this in a heartbeat. RSI is a little overbought, but this is one that tends to stay overbought for over a month at a time. And it looks like we're about 2 weeks, maybe only a week into this. So that looks good. That'd be another check mark in the pro column. We have positive PPO, and the difference between the 12-day and the 26-day moving averages is getting wider. That's another positive. It's in the leading quadrant of the relative rotation graph. The accumulation distribution was at an all-time low about a month or so ago, not even a month, 3 weeks maybe. And look at the acceleration on the accumulation and the money flow. So
Interesting.
if I didn't own this one and I was interested, I would jump on this even at these prices.
Yeah, and just to kind of agree with Daryl, I would be buying if I didn't own so much Alibaba. I own a lot of Alibaba. Great. So it's not that I don't, at a 16% discount for a strategic business like this that is going to continue to be the leader in their markets for Asia, it's a buy. I just need to keep my portfolio somewhat in some diversification, and have this stock have like a limit to how much capital I'm going to put into it. But it's looking good. I'm very happy to report that it's doing really well. The next stock I wanted to look at is a smaller stock, and the stock is Clear Secure. This stock we talked about for a year, and I was asleep at the switch on this one. Look at this rise. This came up. I was watching a different YouTuber, and he showed this, and I'm like, oh man, Clear Secure has had a really nice year to date, and this rise has been great. It's gone from 27 up to 37. And this stock has really good fundamentals, good growth. It's a small stock. It's not the biggest company in the world, $5 billion market cap. PE looks pretty rational, considering that they are growing at 20%. They have good profitability, really good free cash. And what are analysts thinking about the stock? 6 analysts cover it, and they think it's fairly priced. It's been going up quite quickly, so I can't argue with them saying, hey, it's probably fairly priced. I'll show you my valuation in 1 minute. It's expected to continue to grow. That growth looks good, and the profits are going to expand much faster. Look at that. Almost double the growth rate on top line revenue, the growth rate of profits. So that looks terrific. I updated my valuation, and here's what I've got. Got a 44% discount on Clear Secure. It's got really good value coming out of those cash flows. It's fairly priced based on earnings per share. That's a good looking stock, and it's been working. Investors really like it. And Mike, the dividend investor guy, he has done well. I've owned you 3 times. You have to buy it right. I agree. Right now, it's been on a rally mode. This is a small cap. So just wanted to show that, hey, the stocks are out there. We just got to find them, buy them under the right conditions, buy them at a good price, good discount, and you'll be better off for it. So Clear Secure looks good. Any comments on Clear Secure on your side, Daryl?
So I wanted to go back and see when they IPO'd. I knew they were a fairly new company. It looks like they IPO'd in 2021, and their highest price has been about $58.93. back when they first IPO'd. The interesting thing is it is trading above where most of the buyers bought. So I don't see many stranded longs up here.
Mm-hmm.
So that lessens the pressure for upward movement, in my opinion. We'll go out to the 1 year and we can do the same thing I've done on some of the other charts. We'll add an auto support for resistance. And looks like we had a big price spike here and then something happened, which really drove the price down. Oops, I didn't want to do that. Let me get out of annotation mode now so I can see my charts, and I'll save this in case we look at it again. So yeah, I don't know what happened here. Is this maybe earnings back in November the 7th or so? And it basically traded sideways for months and months, but it's recently broken out of a double top. So this is a new breakout. I do have the 21-day on here as well. So it started trading above that 21-day EMA back in June. It's only tested it twice. So anytime you see a test at this 20-day, that's probably a really good entry point because the moving averages are all in the right order. They're all increasing. So you're in a primary uptrend. It's a fairly new uptrend for the 200-day moving average, but it is improving. It's not overbought. It's in positive territory on the PPO and has been since the end of June. It's not quite in the leading quadrant because the momentum is a little bit lower, so it's probably in the bottom right-hand corner of that 4-quadrant chart because the momentum is less than the 0 horizontal line, but the relative strength is above. So that would put it in the lower right corner of that quadrant, which means it's weakening, not that it's bad. It'd have to be over in the lagging quadrant to be bad. So that's what this indicator tells me. Accumulation is near a 52-week high. Money flow looks really good. The performance over the last year above the S&P, pretty much even. The technology group, it's lagging a little bit. The software group, yep, they are in software, the industry group. They're lagging that a little bit, and that industry group is outperforming the S&P. But this breakout could be pretty exciting. Let it stay above the 21-day line. Look to purchase it when it hits that line and keep some stop losses on it if you're worried about losing money.
Excellent. Thanks, Daryl. Right. So we've covered a lot of ground. Nicely done, sir. Looks like the market's still in a little bit of a sell-off mode. I think the market's going to really react to the announcement of the rate cut. And I think you made an earlier comment that if a 25 basis point cut is announced, we may sell off because it's already priced in. And investors are like, all right, we knew that was coming, sell off. So, but we'll see. Most of the time, it's just a total guess as to what's going to happen, but we'll see.
If he indicates that there's strength ahead, maybe the labor market is decreasing, but they expect improving GDP, then the market could really take off. But if he indicates any real concerns, then we could see a sell-off this afternoon. We'll just have to see.
Yeah, and poly market, a different way of seeing what the prediction markets are saying. It's saying, I'm gonna interpret it the way that I would interpret it. 92% chance we're going to get a 25 basis points, 8% chance we're going to get a 50 basis points cut. 92% is pretty solid. It'd be very surprising if we got a 50 basis point cut. And I think a 50 basis point cut would stir the market in the wrong direction, I believe, because then we're introducing, hey, we got a bad economy. But I like the charts you showed earlier, which I think you said the Atlanta Fed has this other kind of data.
Yeah.
It leads me to be a little more optimistic that, hey, our economy is doing a little better than I thought. So, hey, we'll see what happens.
They are, in my opinion, they're pretty much above. They're pretty high above the neutral rate at this point.
Mm-hmm. Yeah.
I mean, over the next 2 years, they're pricing in 7 cuts or 8 cuts in total. So 6 would be 1.5 points, and that's about where I think the neutral rate is sitting at the moment.
So when I bought my first home was in 1994, and I locked in like 7.5, and boy, it was like my relatives and stuff were like, good job, man, that's such a good rate. Because my mom was paying like, geez, double digits in the 80s for real estate.
Yep.
And so when I got 7.5, people were like, wow, man, that's phenomenal. Fast forward 5 years ago, you can get 2.5.
Yeah.
It's like, geez. All right, sir. Well, that was a really good stream. Thank you, Daryl.
Thank you, Victor. It was good to be here.
Couple of announcements tomorrow. We're going to be streaming in conjunction with the FedEx earnings. FedEx is going to announce earnings tomorrow, and it's a good company to follow because they are a barometer to the economy. If they're growing, that means there's a lot of stuff being shipped, a lot of commerce happening. So that'll be interesting to follow it. And we're going to follow a format that I hope everybody finds interesting, which is we're going to, about 4:15 Eastern, we're going to start streaming. By that time, we should have the financials for FedEx. I'll do a valuation on fundamentals. Daryl look at the charts. Then we're going to listen to their management and have their comments. Once management's done, we'll stop listening, and then we'll again, maybe comment on the stock further and kind of see what we're thinking on FedEx. And then we'll cover anything else that comes up as well. But that's going to be the primary topic on the stream tomorrow afternoon, evening. Join us if you'd like. It'd be great to have you. Another thing that I'll bring up is thank you so much to a new member of the channel, and any member that hasn't provided you just have to email me and I get you all the perks. Please email me if you're a member and haven't done so at victorhinvesting@gmail.com. I want to make sure you get all the perks and you get access to things like all the valuations that I put together. You immediately start seeing the videos on YouTube that you qualify for based on your member level. But I want to make sure that you get as much value as you can from being a member. And I appreciate you being a member. And that is it. That is it. Well, good luck, everybody. Thanks for tuning in. Daryl?
I will be posting my summary notes from the press conference in the Discord as soon as he finishes speaking today.
Great. Thank you. All right. Well, Daryl, have a great day. Good luck with your trades today. And thanks again for hosting the call with me.
Yep. Thank you for inviting me. I appreciate it. And everyone, thank you for your questions and listening.
All right. We'll see you guys. Good luck. Take care.
Take care.